Welcome to COBA 2021. My name is Christopher Woolridge and I'm from Temenos. Today, I'm going to be talking about your growth. In particular, why originations matter to customer-owned banks. And in particular, why digital originations can be a game changer for the sector. Traditionally, customer-owned banks have been marked as having a higher cost base than their major competitors. Here, I'm using the Mutuals Industry Review data for 2020 from KPMG. And you will see across all banking sectors, there is a trend towards an increase in the cost to income ratio for the banks, which has been driven by the increasing regulatory burden that all banks face. As I say, the member-owned banking sector has tended historically to have a higher cost base than their larger peers. Going to 2020 and beyond, from the net interest margin, there has been a continued squeeze on margins across both the majors and the customer-owned banks. So we find ourselves in a position in 2021 where costs are increasing, net interest margins are decreasing. What can we do about that? Well, one of the things we can do about that is improve our digital acquisition of new members. Switching to the majors for a moment, here I'm quoting the Future of Lending for Major Banks in Australia, again from our friends KPMG. And I've cherry-picked 6 key items from the page on the left. Now, those items include using third-party sources of information to augment digital applications. Open banking is going to be a major player in onboarding, particularly in the lending space over the coming years. But before that, the use of electronic signatures can be applied today and is a major thrust for the larger banks. Pre-filling data wherever possible means nothing more than making the application simpler for existing customers, because inertia plays an enormous role in the banking sector. In other words, I will take the easiest path possible for me. Using business rules to automate straight-through approvals. Very important for transactions and savings accounts and retail lending that can be automated, and customers can begin to transact with their accounts or access funds, not in weeks, but in minutes or a small number of days. And again, point number 5, keeping humans in the loop for critical decisions is a very interesting emergent trend in Australia, particularly in the SME space. We've seen banks that have come to the market, which are new license holders who are focused on bringing the human relationship back into banking, particularly on SME. But in a broader sense, this is something where the customer-owned banking sector absolutely shines. And it's important to state that we are not suggesting the removal of humans. What we're saying here is to play to the traditional strengths and to build that into the digital onboarding process. So how is the customer-owned banking sector doing digital onboarding? Temenos set out to map the state of play for onboarding in the customer-owned banking sector. We commissioned some independent research specifically for COBA 2021. Is we chose 58 customer-owned banks. And for each one of those 58, we went to the website and we took a look at how the bank onboarded its customers for transactions and savings account. In other words, how do you become a member of the particular bank? We then looked at the digital application process for a personal loan. We chose one. We then looked at the onboarding process for credit cards. We chose one. And then we looked at home lending, mortgages. We chose one journey. What we tried to do here is get a sense for the variability and, importantly, the quality of the onboarding process for the banks, so we could benchmark them. And to perform the benchmarking, we had to have scoring. So we chose a very simple scoring scheme. For each one of those 4 journeys, let's say the transactions and savings account, we scored 1 if the onboarding process demanded a branch visit or made the applicant complete a PDF form. In other words, download a form offline, fill that out, take it to a branch. We scored 2 if there was a digital inquiry form. In other words, there was some digital form. You fill it out and then there is a partial process. We scored 3 if either there was an enhanced inquiry, and by enhanced we mean full data capture, but not full straight through processing so far as we were able to tell, or a first generation application. And a first generation application means nothing more than, let's say, it didn't have a strong mobile responsive offering. And then to score 4 being full marks here, required full application capture and API enabled. And by API enabled, we mean from very simple things like address lookup components to simplify the process on behalf of the applicant. And as I talk about often, onboarding is a game of inches. There is an economic cost incurred in terms of the number of new customers onboarding. And there is a direct relationship between success rates and the time to complete an application. So having simple things like an API-enabled address lookup not only delivers a cleaner data set, but it does so faster. And in the end, speed means more customers, as well as supporting straight through processing. That's how we then went back to our friends KPMG. In this case, we took the KPMG Mutuals Industry Review for 2020, and we looked at the data set. And of our 52 banks, there were 37 matches in the data set that we could use for ranking and comparative analysis. And the remainder of the data we're going to be presenting here is based on those 37 different member-owned banks. Let's look at our results. What we've done here is we've taken the total asset ranking from that KPMG report that I just mentioned, and you'll notice that the axis here is from smallest ranking. In other words, the ranking of 45 or so, we've actually got 37 in our data set, up to the largest ranking. And then we've got an onboarding score. And the onboarding score is the average score across those 4 products, across transactions and savings, across credit cards, across personal loans, and across mortgages. And so you've given an average score here, and the highest score you can get is, of course, 4 out of 4. Let's do a scatter diagram that shows the relationship between total asset ranking. And again, the larger customer-owned banks are on the right-hand side here, with the asset ranking close to 5 on this axis. And here the onboarding score. And what we see here is the first interesting results. The size of the bullets in these diagrams represent the variance. So for example, this bank has an asset ranking of approximately 6, and it has an onboarding score of 3. But the large bullet size mean that the variance was high. In other words, some of their products had different onboarding scores. And what that might mean is they have first-class onboarding with modern responsive design for their transactions and savings, but in inquiry form for a personal loan. Therefore, the first class would score 4, and the poorer quality inquiry score would score 2, giving it a large bullet size. This bank has the smallest possible bullet size, which means all of their onboarding processes for all of their products are high quality, modern digital applications. So the first thing we learn from this is that the larger member-owned banks have very variable onboarding processes. They tend to have onboarding from multiple different vendors. They tend to have different look and feel in the onboarding, and some of them, quite frankly, are not particularly good. If we look at putting a trend line through this, as you would expect, the larger member-owned banks do typically have better digital onboarding than their smaller peers. However, if we break that down by quartile, you will find that it's only in the bottom quartile where there is a significant difference. What this means is that larger customer-owned banks could do a lot better. All of the big 4, and in fact, the top 10 banks in the Australian banking sector score 3.5 or above. They have learned the lesson that first-class digital onboarding is a means to grow their customer base at a lower cost, and also, as a result of that, to improve their net interest margin. The Customer-Owned Banking Association should take note and encourage their members to do. Now let's look at the total assets. This is the same data I showed you in the previous graph, but instead of ranking, we're looking at total assets, again from that KPMG report, and again dated 2020. This paints a very interesting picture because, of course, driven through mergers, there are some very large customer-owned banks in Australia. And as I said on the previous slide, size of the organization does not give a true indication of the quality of digital onboarding. And indeed, it tends to be the mid-tier and all the way through to the small banks are actually doing better than their larger peers. I'll say that again. The mid to small tier customer-owned banks are actually doing better in digital onboarding on the whole than their larger peers. This is, again, we feel from our experience, driven by inertia. It is more difficult for larger organizations to be able to make the changes at speed to embrace the best in digital onboarding. And Temenos can help with that. We look at that trend line again. There is a trend, but in this graph, once you pull that out here, the trend line is certainly not clear for these top 3 customer-owned banks who are underperforming. The average is, by the way, a 3.0. And so that average, which is the dotted line here, tells us that almost all banks have some digital capabilities, and that the average digital capability that they have is in fact a first generation digital onboarding form. We see a lot of homegrown PHP based forms that quite frankly do the job, but they are poor in terms of mobile responsiveness, and they do not embrace APIs, and they do not have straight-through processing. That's how you score 3. What they lack is the fitness and the polish of first-class digital onboarding experiences. And that, we believe, is where customer-owned banks can improve. Now, let's move on and look at the same data where we've instead put the onboarding score on the x-axis now. And the idea here is to say, is onboarding capability, is the rank there a predictor of an increase or a decrease in total assets? Now, this can never be the sole predictor. The increase or decrease in total assets is driven by very many factors. But one of those factors in a multivariate analysis is, of course, digital onboarding. Is it simple to acquire new customers? Because, as I keep saying, if you make it difficult, many customers will abandon. And so what we have here is a trend which is, in general, better onboarding is a predictor, according to the trend line, of improvements in the increase or decrease of total assets. But again, here, if we simply look at the number of customer-owned banks that sit on the average here, this is not a particularly informative line because the trend is heavily biased by the many dots that sit here. So it is not a strong predictor. However, from the Temenos value benchmark, which is a benchmarking exercise that we perform with banks of all sizes, we have found a strong correlation between return on equity and the quality of digital assets. We've also found a strong correlation between the onboarding coupled with the internet and mobile banking. So high quality digital does tend to be an indicator of more mature banks, and the more mature banks tend to have better return on equity. Again, not necessarily the driver for customer-owned banks, but there is an overall industry trend here. What does this teach us? Can we quantify the benefit of having a score of 4 compared to a score of 3? Yes, we can. Temenos assisted a mid-tier Australian bank who had an existing personal loan application, and it was a score of 3 on our scale. So it was a first generation digital loan application. And because it was an existing application, we had a natural experiment. We were able to replace the existing digital personal loan application, but the underlying loan product was not changed, nor was the marketing for that product. So it was an ideal experiment. Any changes that were made to the onboarding and any improvement or any decline in the application rate could be directly attributed to the quality of the digital onboarding. And the results are quite startling. We delivered for that bank a 78% uplift in the number of loans, applications that is, the number of loan applications that were received through the digital channel, wholly and solely driven by the quality of the onboarding experience. And so in a broader sense, your growth can be driven by your digital onboarding. And we have multiple proofs in the market that look similar to this. This was a 3-month project and it had a 9-month return on investment. The key thing about digital onboarding is it can be done as a standalone initiative, and customers do not even need to know whether it is a true straight-through process. You can put high quality digital in customer facing assets, and you can deal with complexities in the middle tier through robotic process automation and other tools. It doesn't even have to be fully API driven through to the core. And this 78% uplift that we delivered here was not in its first 3 months automated through to the core for the originations. So you can drive significantly growth through targeted improvements in digital acquisition. Now, my name is Christopher Waldridge. I am the regional head of Infinity BSG for Temenos, and I'm based in Sydney, Australia. Temenos can help you in the customer-owned banking sector with your originations. We can replicate for you the success that I've just quoted. We can also help you in the uplift in your internet and mobile applications through our full suite for retail and for SME, for wealth, and indeed for corporate. We also are Temenos, which means we have our Temenos Transact core banking capabilities available as a SaaS product for consumption with the Australian Model Bank. And finally, we can assist you for free in benchmarking your own capabilities through the Temenos Value Benchmark program. Thank you for your time. Enjoy COBA 2021.